Another blessed day in South Florida. Beautiful day too. Last video I addressed FHA loans, purchasing a home with FHA loan, and someone wanted me to address conventional loans, what are the requirements for a conventional loan. So this video, I'll try to keep it as brief as I can, but provide as much information I can within that short period of time. Now, generally speaking, when a person is buying a home, that person has options as to what type of loan product that they may use. They can use conventional, they can use FHA, they can use VA, and they can use USDA. All of that is dependent on the person's circumstance and the location where they are buying from. So those are the factors. Now, when people are buying a home, generally speaking, they're thinking of a conventional loan. That is the most common. Most lenders provide that. However, in the past, because of the high down payment requirement of 20%, most people were not able to qualify. However, that has since changed. Now, when you're buying conventional, if a person chooses to buy with conventional, here, FHA and VA, even the USDA, those are government insured, government guaranteed, in other words, government backed programs. Whereas conventional, that's a private loan taken from a bank or a lender, so therefore there's no government program that insures or backs them. As such, the bank would require the individual, the borrower, to take insurance called private mortgage insurance, also known as PMI insurance, or PMI, private mortgage insurance, PMI, or MI, and that's for the purpose of covering the lender. Both FHA and VA, those are for the benefit of the lender. If the borrower defaults, the lender can get the insurance, or the government will guarantee, such as in the case of VA. Whereas here in conventional, there's no such thing. In the past, as I just stated, in the past, lenders wanted you to have 20% down payment. And what does that mean? I called it skin in the game, as you probably are aware if you've watched previous videos. So skin in the game means the bank wants you to have some commitment to the transaction, to the house, so that way if things get rough, you don't just leave, so they don't have to go through the foreclosure process. So when a person has 20% down, that is a higher amount, so they're less likely to walk away from that kind of money. So, but over time, obviously, we live in a society where people don't really save that much money, so it's hard for a person to come up with 20%, the average American. So there are other programs. But here, conventional, nowadays, you can buy a home using conventional with as little as 5% down payment. However, the kicker is, if you buy conventional with less than 20% down payment, the bank, the lender, will require the individual, the borrower, the purchaser, to get PMI insurance, which is private mortgage insurance. That is the requirement. If you put 20%, you don't have to. If you put less than 20%, well, in that case, once the property, by law, once the property reaches 78% equity, meaning from the original purchase price, once you can do an appraisal, get the appraisal, you can prove that the property is worth 78% of what the original price was, the lender must remove the PMI requirement. This is something most people don't know, and most people don't educate them about it, so they end up losing a lot of money because they paid for something that they didn't need. Okay, so that being said, now let's talk about qualification ratio as far as income ratio. As far as income ratio, what income do you need to qualify? Unlike the FHA, the VA has the conventional has a more stringent requirement. Here, I don't know if you recall when I talk about pity, when you make your mortgage payment consists of several things. It consists of your principal. So when you pay, part of that payment goes towards your principal to pay down the loan. Second, also part of that payment goes towards your interest, the interest you're paying on that loan. Third, taxes, property taxes. Part of that payment goes towards your property taxes. And also part of that payment goes towards your insurance. So we call it pity. So the pity so your mortgage cannot exceed 28% of your gross monthly income. That is, meaning it's a little more stringent, it's a little harder to qualify that ratio because most people may not make a large amount of money. And whereas the total, that's the upfront debt to income ratio for the PD, and then you have the back end debt to income ratio, which is your PD plus all other expenses, all other debts you have, such as your student loans, such as your car payment, such as credit card payment, any other debts you have. Those combined with the PD cannot exceed 36%, whereas for FHA that is 43%. So 36 versus 43, you can see there's a 5%. There's a gap there that would help an FHA qualify, even though they don't make as much money. So that is basically it. And after the bank makes the loan to you, they'll sell it in the secondary market. And that is basically, in a nutshell, all there is to discuss about conventional loan. I'm trying to think if I'm missing anything. I can't think of anything that I'm missing. So therefore, I will close this out as quickly as I can because I don't want to keep you too long. I don't want to lose your interest. That being said, I thank you for the question. I really appreciate. Well, it wasn't a question. She just asked, "What about that?" And what I will do, since I had that question, I figured I will make the next video about VA. So that's for my veterans. I am a U.S. Navy veteran, so I would definitely like to share some knowledge with the vets out there or their spouses. And again, please do me a favor. If you find any value in this video or any other video that I share with you, please share it with someone else, because that person may be in need of that knowledge as we speak, and if they don't have that access, it can cost them in the long run. So I'm not saying this particular video will do that, but I'm all about sharing knowledge, and I think that's how we grow. So please do me a favor. If you know anyone who might be interested, who may benefit from this, please share it with them. Okay, that being said, have a blessed day and a very productive day. Thank you.